Darius Vasefi at Retail Tech Podcast here. I am talking with Keith Nealon at Vyze, which is a lending platform for retail. Thank you so much for giving me this time, Keith. And why don't you go through and go ahead and give me a little introduction on yourself and what Vyze does.
Sure, yeah, thanks, Darius. It's good to be with you. We're basically a technology platform, and our customers are retailers and brands or manufacturers. And what we do is we connect them to our platform and bring with our platform a comprehensive, full spectrum set of lending supply. So we're not a lender, we have lenders on our platform, and by having a broad set of lenders that we can bring to retailers, what it means is retailers can offer financing to more of their customers than ever before, and definitely more than if they were working with any single lender versus with us, where we have kind of comprehensive lending supply on the platform already. So in short, that means they grow their business more because they can say yes to more customers, and more customers can have a successful financing and shopping experience.
So would that be like a marketplace almost?
Well, it's not a marketplace in that we don't dynamically allocate lenders per se. So when we set up a retailer, we work with them to choose which are the best lenders for their program. And then based on the customer demographic, the customer applies for financing or is offered financing. And the customer is sent into our system and pass through the various lenders. All lenders have their own underwriting model. It's their proprietary secret sauce. Eventually, one of the lenders will typically say, yes, we'd love to have this customer, and they create a financing product for that customer. So it's not a marketplace in that it's not dynamically matching supply and demand. It's really a platform that enables a retailer to offer a customer a product via financing. The lender may be dynamic depending on
The criteria.
the criteria for the customer.
So would a retailer typically select like a handful of lenders that they would want to have on their system, or?
Yeah, the average range is from 2 to 4 lenders with a variety of different financial products serving a variety of different customer demographics. But the key for the retailer is, instead of having to integrate with every lender, like retailers shouldn't be in the integration business, and nor should lenders. When a retailer integrates to our platform, they have access to every lender. They don't have to do any more work. And the same when a lender integrates onto our platform, they have access to retailers. It's just about creating the match, which is the right lender with the right products for the retailer's customers or for the brand's customers.
Right. Okay. Yeah. That's why I was thinking about the marketplace model. It's not fully automated, but it's almost like a marketplace where lenders would go to sign up to get matched with retailers, but it's more like on a planned basis as opposed to like dynamically matching them. So, what is the revenue model? Is it software like subscription or transactions, setup fees?
So the core of our revenues are basically transaction fees based on success. So our job, and this is similar to where in the marketplace notion, right? You have Airbnb or Uber that they don't own supply or demand, but they create a successful customer experience, and out of that they get a transaction fee. Ours is similar. We focus on creating a successful customer financing experience, and out of that we get a transaction fee, piece from the retailer, piece from the lender.
Okay, so how easy, or what's the process of a retailer actually getting set up and running on your platform?
So 2 different parts. We built the platform first for retailers at point of sale, and so as you know, there's a lot of talk about mobile and e-commerce, but almost 90% of commercial transactions still happen at point of sale. That will change, but so our solution started there, and now we've obviously got an online product as well. But what that means is obviously we'll integrate via our APIs to the retailers POS system, or online we have a set of APIs that they can integrate with their shopping cart. And at the end of the day, by doing that, we get our retailers up and board in a matter of a couple of weeks.
Okay. So really where you're plugged in on a retailer end is at the checkout page, right?
If you're talking about online,
Yes.
we can do in checkout and out of checkout as well.
Okay, so going back into the POS system and online, so how would it work in the store?
Yeah. So as an example, if you were to come into one of our retailers that had the Vyze platform, you might apply for financing, or they may offer you financing. And so what happens is simply at the point of sale device on the screen, you'd start filling in your information, submit the application, and then what we shield you from is the complexity of you just have to submit once, and then it's transferred to via different lenders based on whether they're willing to accept the loan or not. Or accept the customer. And then once there's a successful event where a lender says yes, we return basically the terms and conditions from that lender, etc., the disclosures, and then the customer is free to choose, does this make sense for me? Do I want this product? And they either say yes or they don't. All of that happens in under 30 seconds.
Okay, so if I can imagine this, is it so is there like a kiosk, or do you work with specific POS vendors that the system is already integrated into their system, or is that the integration that you're talking about as far as on the retailer aspect? The retailer already has a POS system. You go in and you integrate that additional screen at the checkout. Okay, so that's how it works. It's not a paper process where...
No, for the retailer, I mean, our platform's a set of APIs. We have to integrate those, and we've worked with a number of POS systems, but we have to integrate those into the retailer system, because typically most mid-sized to large-scale retailers have modified their POS system in some shape or form. So there's some custom work at the POS terminal or at the POS software to clip our software on, but once we do that, it's available, nationwide, again, in all the stores.
So can your API be plugged into a mobile app?
Technically, it can, yeah. I mean, ultimately, it's a set of APIs that could be accessible from any device. We haven't chosen to expose our APIs to mobile apps yet. That's something we're looking at.
Okay, is there like a business reason or a technical reason for that? Because I mean, as you said, pretty much a lot of these, even in the store, things are going to mobile. So
no, it's just a question of priorities. It's definitely something that we're looking at. So it's more of a strategic reason of when.
Okay.
There's so much that we're doing where most of our demand is at point of sale. Quite a bit of our demand is for e-commerce. And very little is actually at mobile, and we just think that's reflective of where the commerce is now. Right. We're obviously going to get ahead of that before demand really picks up, but we're just going right now where the demand is and satisfying that.
Okay, and I should add that Keith just recently joined the company as the new CEO, so I'm sure you have a million things on your priority list. So
yeah, I'm a 5-month veteran of Vyze.
Yeah.
So there's the good news, and the reason I joined, right, is there's so much opportunity, and it's a huge market. If you think about it, the areas of retail commerce and brand commerce that we play is about 1.7 trillion in annual sales, of which about less than 11% is financed. And there's a lot of reasons for that, but we think that we can significantly increase that pie by giving customers a better customer experience when dealing with financing at point of sale or online.
So a question from the consumer side. Of course, everybody is always trying to keep their credit scores high. So if you're running my credit, and are you doing it once and sending that information to multiple vendors, or are they running it separately?
We use a technology which is really, it's called a soft pull. So that basically means the light checking of your credit score does not impact your score. Once we reach a lender that says that they want to take the loan, they will do a single hit against your credit to actually pull the details. Because remember, we have to give you real-time credit decisioning,
Right.
and so we have to do it, but it only happens once. So,
So
you don't get hit multiple
You
times.
get one inquiry basically on your account, either one way or another.
Yeah.
Yes or no, but one. Okay. What about the dynamics that you see happening in the lending, and this is basically direct to consumer lending, right?
Yeah.
What kind of innovations do you see, not including what the platform such as yourself is doing? What other innovations are you seeing that is happening from a retailer side?
So sorry, on the lender or the retailer side of it?
So what are retailers doing to improve or increase options for their customers?
Well, so the couple things. The first, no matter what a retailer does, it's for the strategy of growth, right? And growth comes in two ways: new customers, customers buying more, and customers coming back and repeat purchases. Our solution helps with all of those things, right? So if we can have the products for a customer, the financial products via our lending supply, to say yes to more customers, so that means more customers have a successful event. And typically what we see is if they're approved for financing, they buy. They also buy more because they now have additional credit available to them. And in many cases, they tend to become repeat customers because they were offered financing at a particular store, and maybe that wasn't always the case. They say half of the U.S. population is declined for financing. So we find that there's a lot of loyalty to these stores. So when you think about retailers who want to improve marketing ROI, drive revenue growth, increase customer loyalty, all of these things our solution helps with.
Okay, and I'm sure you probably have some kind of an analytic dashboard or do you have an analytic dashboard that shows the retailer, what happened over the last month, how did things work out as far as their lending that was going through your system?
Yeah, we have reports that we show retailers as part of the platform offering, where they can actually get a sense of not only how they're performing, but how their lenders are performing as well. And that's ultimately strategic information for them.
Right. Yeah, that's really valuable, so they can probably do testing to see what kind of. So, is there a specific type of product or retailer that you think this would be best suited for? Like really large national chains? Would this be a good option for a mom and pop store that's selling furniture somewhere?
Yeah, no, there's a lot of lenders, actual lenders out there that sell to small businesses. Our platform is really designed for retailers and brands that are around about 100 million in revenue and see the opportunity to do about 10 million in financing. It's a powerful platform. It brings a lot of features and capabilities, but we typically fit in that sort of 100 million revenue range in it.
Okay, and so if I was looking at a retailer, what would be my question? What would be my concern as far as because this seems like a no-brainer, basically.
Well, it's not really that they would have a concern, right? It's just a question of there's an initiative here, and where does it fit in the strategic priority list? So firstly, we make sure that the retailer's in the right verticals. If they are and they have the right revenue, it's a no-brainer. It's just a question of where is it on the strategic list of priorities, how do we get that bumped up, and what are the retailer's resources to be involved, because they do need to supply some resources, whether it's in the store operations side for the point of sale or from the e-commerce team to provide our online solution. So it's just a question of, not really a question of if this is a good idea. It is a good idea for our target customer. It's just a question of when they do it.
Right. What about any kind of a metrics as far as, after implementing this, how did sales get impacted?
Yeah, so we look at several things. Did it increase sales? And the answer is always yes. But how many customers were offered financing post-launch versus prior to launch? And also, Another very interesting metric is repeat purchases. So what are we seeing as the percentage of repeat purchases as part of the overall pie versus before? And typically our retailers are seeing a lot more repeat purchases.
So that brings up another question in my mind is that, let's say I'm a customer of a store. Do I have to go through that authentication and approval process every time, or do you actually like create an account with a specific limit, just like almost like a credit card or something that's open until I reach it?
Yeah, so we have a variety of products, but the majority of what happens is exactly like that. You basically have a revolving credit line, so it's a credit card that you can use, and as long as you're paying down your balance, you can keep using the amount of credit offered. Let's say it was $2,000, you bought something for $1,000, you're paying down $1,000, you've paid off $500, then you still have $1,500 worth of credit to use.
Okay, so if who owns the profile with the customer? Does Vyze own the profile, or does the retailer own it? So like with this revolving line, is it with Vyze that I can go to multiple retailers and use it, or is it individual to that retailer?
So the answer kind of depends on how the solution works. Either the lender owns the profile of the customer, or the retailer and the lender own the customer. And there's a lot to do with how the solution actually works and who gets the data first. But in essence, the lender has to have a relationship, because they're essentially, if you think like a credit card, you have a relationship with that bank.
Right.
But the retailer in most cases will also have a profile of the consumer.
So yeah, the reason I'm asking that is that I can think that, okay, so when let's say I go through this process and I get, let's say, approved, and I will probably start getting emails from different parties saying that, okay, congratulations on opening up this thing. Do I get that only from the retailer, or the retailer and the lender?
So it depends on the purpose of what the interaction is. The lender is certainly going to be contacting you. They have all your information because they're supplying you the loan. And think of it as they're supplying.
The loan is really with the lender, not with the retailer.
Correct. However, the retailer you gave your information to, right. In order to purchase a product and so forth. So in some cases, the retailer will use that and say, hey, you've got a closed loop loyalty card with us, and here are some special promotions that you might be interested in. Kind of standard stuff that retailers do.
Okay, yeah. So it sounds somewhat similar, at least on the consumer and on, like, I'm a customer at Lowe's, and I went through and I applied for a credit card, and it comes from the bank to me. So this is it. Now what you're doing is, that's a part of what you're doing on the POS side, but you're adding I'm going to say the word, the marketplace approach to it, where you eliminate a lot of work from the retailer side of going through and dealing with different lenders. And
we take a lot of friction out of, for the retailer and for a lender, in being able to create a relationship together and then ultimately have multiple lenders. And then the other thing is, it's business continuity. So, depending on the lender, if they're not, like all of our lenders are national, but we have seen situations where a lender will get into a segment of business like retail consumer finance, and then pull out. If you're a retailer and they did that to you, you would lose significant revenue. It'd be a serious problem. With us, we can simply swap a new lender that's already on our platform, and business operations continue. And we've actually seen that happen. It's one of the core value propositions that we bring. It's like an insurance policy.
Right, it reduces the risk. Okay, great. Well, if people want to contact you, what's the best way to do that?
Sure. You can contact me at keith.nealon at vyze.com, VYZE.
VYZE. So that's V as in Victor, Y, ZE.com. Well, thank you so much again, Keith, for giving me this time. It was insightful to learn about the lending aspect, and I think there's definitely going to be probably some really exciting things coming up.
Oh, I would hope
Great.
so. I count on it. Thanks.
All right. Take care. Bye.